talking about some of the nuts and bolts of the way Church Windows works functionally is going to be limited today. This is broad topics we're going to be discussing just about the structure of the accounting module in Church Windows. I am joined here today by Ross, who's going to be answering any questions that you may have as we go through the process of our webinar here today. Speaking of that, on your screen, you're going to have a GoToWebinar control panel. Some of the things in that control panel there's going to be like a little red button on it with an arrow that you can click on to either maximize to either minimize that control panel to open up a little more room on your screen to see some of the stuff we're going to be talking about here in our webinar, or maximize that to get access to some of the features in that control panel. I've included a couple of handouts that you can download. There's like a little handout section with 2 PDF documents. One of them is an understanding fund accounting document, which is the majority of the basis for what we're going to be talking about today. I've also included a small document that talks about the effects of debits and credits on the 5 different types of accounts in our Church Windows program. The other little bit in that GoToWebinar control panel is access to the questions section there. So as we go through, if you have something relevant to the topic at hand here, which is the basics of fund accounting, feel free to go ahead and type that in there. Ross will either grab it and answer back in text, or if I've got some time at the end of the webinar here, I'll address it in front of everybody. So we're scheduled here to just go for 20 minutes, so without further ado, I'm going to start by opening up the accounting module here in Church Windows. Okay, so let's talk about what fund accounting is. The style of accounting that we use is designed for non-profit organizations such as churches. The whole concept behind what we're doing here with fund accounting is based upon the differences, and the example I like to use is the differences between writing a $200 check to, let's say for example, the electric company to pay your electric bill, versus writing a $200 check to your church. And kind of what happens with that. If the difference here is, for example, in the electric company here, they offer you a service that you make use of, and they charge you for that service. And when they charge you for that service, you give them that money, and then they take that and they decide what they want to do with that money. Conversely, money coming into a church, when I write a $200 to my church, I'm donating this money. I don't have to write that $200 check. And furthermore, when I do write that $200 check, instead of the church deciding what that money is for, me as the donor tell the church what I want them to do with that money. Okay, so those fundamental differences between the way income works in a for-profit versus a non-for-profit organization forms the basis behind why we use what's called fund accounting. So, also the reason why using Church Windows accounting is a superior option versus using accounting software that is designed either for a home checkbook or for a for-profit organization. So like Quicken or something like that, it's designed, for-profit accounting. It's not structured in the same way. So to kind of get our brains around some of these concepts and what we're doing here with fund accounting, I'm going to start here in Church Windows by taking us to our chart of accounts window. And you're going to see, here's all of the accounts that we have here in Church Windows. I'm going to collapse the accounts just so we can only look at the 5 account headings. I'm clicking on the little pluses right next to the account types here. So there are 5 different types of accounts that we have here in our Church Windows program. And the little number that you see next to that account, if I expand assets, you'll see it says 1 and then asset. You'll see each of our asset accounts that we have listed under there begin with the number 1. The rest of the numbering scheme that you put in here is completely up to you, but Church Windows is going to take that first number so that you know what type of account it is based on how that account number begins. Okay, so the gist of this is I want us all to understand here today what these 5 different types of accounts do and how they fit together in a fund accounting system. Okay, I'm going to start. Well, and then the next thing I'm going to do is I'm going to go into that accounting fund theory document. This is also a document that's available on our website under our support blog, which is at churchwindows.com/blog as well. Okay, so I'm going to scroll down, and the first 3 accounts I want us to talk about here are assets and liabilities and fund balances. This equation right here is the starting point for how we understand the way all of our accounts fit together in Church Windows. So assets, as we see here, is the first account. That is all of our accounts that begin with the number 1. So when I switch back over to our chart of accounts, assets, and by the way, I'm not an accountant by trade myself. I'm more of a computer nerd. I do systems over here, which makes me perfect for explaining this because I'm not fully into all this. Assets, in general terms, is everything that your church owns. These are your church's assets. So if I expand this, you're going to see that's the value of your checking accounts. That is the value of your savings accounts. That may be an investment, the value of your investments, the value of your land and buildings, etc. Everything with a value that the church owns is considered your assets. So those are your accounts that begin with the number 1. The accounts that begin with the number 2 are your liability accounts. This is what your church owes to somebody. So what we've got here under liability is what you owe to your vendors. So like, for example, under accounts payable, here's all of your vendors that you work with: Christian Bible Supplies, could be your utility companies, your gas company, your organ repair company, etc., 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 on down the line. So your vendors that you work with are liabilities. Your taxes payable, your tax withholdings either to the federal or the state government are considered liabilities. Your mortgage payable, so any loans that you have are considered liabilities, money that you owe to a loan. And then the other common one is a pass-through account. So if you take money in on behalf of another organization, like Housing for Habitat or disaster relief or something like that. So assets are what you own. Liabilities are what you owe. So what's a fund? This is what we call, the whole system is called fund accounting. I'm going to switch back to our little equation here. Everything works in Church Windows based on this equation. Everything that you own equals everything that you owe plus the values that you divide up amongst your fund balances. Assets equals liabilities plus fund balances. You can switch this equation around, and the way I always do this in my own head, this can also be considered to mean assets equals assets minus liabilities equals fund balances. You could switch this around if you move the liabilities to the other side of the equation. So like everything that you own minus everything that you owe is all of the money you have left over to divide amongst your fund balances as you see fit. So that's the way fund accounting works. Your assets minus your liabilities equals what you have left over to distribute amongst your funds. So if I flip back over to our chart of accounts here and we look at our fund balances, these are designated pots of money that you have available for different purposes. They're not real world money that you have sitting in a checking account. It's representing available money that you have for a purpose. So some examples of those purposes are listed here. We've got our general operating. So that's just regular maintenance of your building and grounds, utility bills, things along those lines. And then you've got some other ones you can set up there. Building fund is a common one. A missions fund is a common one. Memorial fund, etc., etc. Whatever separate designated monies you want to separate, put in a little pot over here and keep track of it separately. What this allows you to do when you set up these separate funds is it allows you to keep track of these designated monies without having to open up a separate checking account for each one of them. A lot of folks mistake a fund balance or a 3 account with an asset account or a 1. Just for example, just because you have $10,000 sitting in your general operating fund balance, that does not equal $10,000 sitting over here in your Huntington Bank checking account, for example. There's no direct correlation between the amount of money in one fund balance and a separate checking account, other than the equation that ties the whole thing together. So in a lot of ways, the way I think about this is assets is real world money. That's real cash sitting in a checking account or real value that you have with an investment. Liabilities are real world money that you owe to somebody, whether it's a mortgage or a vendor, etc., etc. So you take all of that real world money, assets, subtract your liabilities. The rest of it is this pool of cash that you divide amongst your fund balances. And the way fund balance accounting works is it keeps track of the amount of available money for each of these funds. Okay? The other two things I want to make sure that we understand are your income accounts and your expense accounts, your 4s and your 5s. Those accounts exist to track the flow of money into and out of your funds. So we've got our general tithes and offerings income account, which tracks money coming into, as we see over here on the right side, money coming into your general operating fund. As we select each of our different income accounts over here, they will be linked to a different fund. If I scroll down, you'll eventually see some of them linked to other building funds. Building fund contributions might be linked to another fund. So income accounts represent the flow of money into a fund. Expense accounts represent the flow of money out of a fund. So it could be payroll, salary and benefits for your minister, supply pastor, music director, salary and benefits, etc., on down to expenses for your utilities, telephone, internet service, repairs and maintenance, office supplies, etc., etc. All of these things are expenses. So you link these income accounts and these expense accounts to a fund, and then they allow you to track the income and the expense to a particular fund. If I switch back over to our little fund balance document here, if I scroll up a little bit here, there's a little map here that shows the components of a working fund. So every functional fund in Church Windows has 3 components to it. It's got the fund balance, which is the accounts that begin with the number 3, which tracks the amount of money sitting in that fund. Then you have at least one income account, tracking money coming into your fund, and at least one expense account tracking the flow of money out of your fund. The amount of income accounts and expense accounts that you have linked to your fund represent the amount of detail you want to see in a report coming out of Church Windows. A fund would work just fine with a single income account that says income to the general fund balance, and a single expense account that would say expenses for the general fund. But if you take that report to your finance committee meeting, people may want to see a little bit more detailed breakdowns for where that money's coming from and where it's going than just income or expense. So 4 accounts and 5 accounts are really just, in the way I think of them, they're just line items for reporting purposes. As much or as little detail as you need to see on your reports is how many income or expense accounts that you have. So those are the 5 accounts we have in church windows, and a little bit about the way they're linked. If I scroll down here, there's another bit of our map here that shows us when you record income coming into your church, increased income, when that income goes up, when you record more income, your corresponding fund balance also goes up. When you record increased expense, then your fund balance comes down. So increased income is more money in your fund, increased expense is less money in your fund, is the way those linkages work. Okay. Boom. And that's the way those 5 accounts link in together. Okay. Anytime, another example here, anytime you record an expense to your church, so money is coming out of your checking account, one of your asset accounts. In order for this to stay in balance, then money has to also correspondingly come out of one of your fund balances. And the way that works is by recording, when you record an expense, for example, you write a check out to the electric company, for example, that money comes out of your asset, your checking account, and then you record an expense like an expense to what did I just say? It says telephone bill here. So let's say you're paying a telephone bill. So you write a check to the telephone company and that money comes out of the asset. Then you record expense for the telephone company. And because of the way the linkages work between your expense account and your general fund balance, your fund balance comes down by that same amount, which keeps our big equation here in balance. So an asset comes down and a fund balance comes down and it stays in balance. This is all handled by the way that the transactions in our church windows program are set up. So if I come over here, and we run out of time very quickly in these webinars, so I'm going to show you an example of a transaction, then I'm going to show you how these accounts are reported on before I have to let you go. So if I come into transactions, and for my example, if I do, let's record income. Let's record income because that's a simpler transaction than entering bills and paying bills. So if I record income, the way this is going to work, there's an asset account you're going to be recording income into. That's money coming into your number 1 accounts or your assets. If you've got money coming into that asset, let's say it is money from a building rental. Somebody had an event in your building and you recorded it as rental income. The way that works, if it's a $200 rental income, if I show my running balances by clicking on the show running balance button up here, you're going to see your Huntington Bank checking account, which is your asset, is going to go up by $200 when I post this transaction. Also, your rental income account also is going to go up by $200, which then will increase your corresponding fund balance, keeping everything in balance in your system. So that's the way these accounts link when you post a particular transaction. Last thing I want to show you before I let you go, and I am actually going a little bit over time, so I apologize about that, is the reports that show these 2 linkages here. The 2 reports that talk about the things that we're discussing here today. If I come over here into reports and I go to financial and I click on my balance sheet, the balance sheet report is the report that shows this equation here. This assets equals liabilities plus fund balances, what keeps your system in balance. So the balance sheet report Let's do it for the January of this year. When I show our balance sheet and I click print here, it's going to show us all of the balances at the end of January for all of our assets. So you'll see our assets listed here. Our total assets is listed here. So because of the way the equation works, this total assets is going to have to equal our total liabilities and our total fund balances. So when I scroll down on my report to the very bottom, here's all of our liabilities and their balances as we go down. There's our total liabilities. Here's all of our fund balances. So you see we've got the same amount for total liabilities and fund balances as we have in assets. That's how the system stays in balance. The other report I want to make sure that I show you guys is the treasurer's report. What the treasurer's report shows us is this activity, this part of the equation over here, the linkages of our incomes and our expenses to a particular fund. That's what the treasurer's report shows us. So if I go and I take a look at that report, under reports, financial and treasurer's report, this is the one that shows all of the income and expenses. You can limit this report to a particular fund. So if I only want to see the income and expenses for my general operating fund, I can do that by selecting that under fund here. I'll again run this for January of this year. And when I click print, this shows us all of the activity for our income accounts. So you're going to see all of our incomes listed here. The period activity, which is for January. Income and expense accounts can be budgeted for. So therefore, you can see some budget information on this report as well. So those are the two reports that are, in my opinion, most integral to showing the concepts that we're talking about with the basics of fund accounting. So that is the nuts and bolts of how we structure our accounting in the Church Windows program. It is specifically designed for a nonprofit organization like a church, and some of the basic tools that you have available to you. I'd like to thank you guys for joining me here today. If you're all set to go on, let's say your cup of coffee is empty, it's time to go get a new cup of coffee. Feel free to go ahead and click on the X in the upper right-hand corner of your GoToWebinar control panel. And thank you so much for joining me here today. I'll try to snipe off a couple of questions here before I close the room. So if you've got some questions, let us know. Thanks so much for joining me, everybody. Hope you have a good afternoon. Okay. Come on, dummy. Bigger. Boom. Let me reiterate that the documents that I included, this document that I'm referring to for our webinar here is available, this fund theory document. I included it as a download for this webinar. So if you go to your GoToWebinar control panel, there should be a little section there called handouts. And there's an account fund theory document that you can download, which is really what we've been talking about here today. There's also a little PDF that shows the effects of debits and credits on the 5 different types of accounts. If you can't get that document downloaded from the handouts portion of the GoToWebinar control panel, you can also get that on our website. If you go to churchwindows.com, here's our website here. If you scroll down the page on the left side, underneath the blue bubble that says Using Church Windows, you'll find a support blog. It's right here. Here's our support blog, and there's a number of great documents you can find here. So if we click there, there's a whole bunch of great stuff here. This is a searchable blog, and the best way to find this fund accounting document is just search for the word fund. Go type search for fund, click search. Accounting fund theory. This is the document that we're using as the basis for our webinar here today. A lot of other great information on here as well. Always worth checking out the blog. Question came in from Terry regarding sometimes a fund will end up going negative in church windows. If a fund balance ends up going negative here, that just tells us that our expenses have exceeded our income for that designated fund, which is not ideal. Of course, that means you've got more expense than you've got income. But keep in mind here, the fund balances are kind of like it's virtual money we're talking about. I try to express this, and it's a difficult concept to get through, right? If your building fund balance goes negative, you've got several options here. You can have some kind of fund drive. You can ask your members for help, through donations to get your income to come up. Also, it's not uncommon for somebody's fund to go negative and then you have to borrow from another fund. So if your building fund balance goes negative, you can borrow money from the general operating fund very easily just by posting a transfer, for example. There's a number of ways you can do this, but you can always transfer money from one fund to another. Very simply, if you go to transactions, there's a transfer transaction up here that can move money between funds if you need to do it that way. There's a number of ways to do it, but a negative fund balance just means your expenses have exceeded your income for that designated purpose. As long as you've got money in your real assets, your general checking fund, you're not out of money, of course. It just means that fund is operating at a negative in terms of expenses versus incomes. Yeah, functionally linking accounts in church windows. When you add a new account, that's not the purpose of the webinar isn't to talk about the sort of the nuts and bolts of how this stuff is accomplished in church windows. But just real quick, since the question came in, when you create a new account, income or expense account. So if I go to manage accounts, I click on accounts plus minus. When I create a new income account, at that time, you have to tell it which of your funds you're linking it to. So at the time of creating a new income or creating a new expense account in church windows, you must tell it which of your funds it's linked to. And from that point on, any income flowing into an income account or expenses flowing out of an expense account are going to affect the balance of that fund that it is linked to. Also, if you have a particular income or expense account that you need to change how that linkage works, if you come here to your chart of accounts screen, if I select a particular income account, over here on the right side, you can change the linkage that a fund has right here on the chart of accounts. So you can adjust it if you need to, but generally speaking, when you create a new income or expense account, it gets linked at that time. Okay. All right. Looks like we've got everything taken care of here. Thanks so much for joining me, everybody. I'm going to go ahead and end the webinar for everybody. I hope you have a lovely afternoon. If you have any questions, feel free to let us know into our support line, which is at 800-533-5227. We'll be glad to talk to you there. If you want to send us an email, you can do that as well into support@churchwindows with an S at the end of it.com. So yeah, again, thanks for joining me, everybody. I hope you have a good afternoon. Bye now.